Good morning, yo. We're gonna start soon. I'm just looking over some stuff real quick. What's up? Oh, for sure. Hey, so could you do me a favor real quick, brother? Okay, so just want to make sure everything's working properly. So do you hear any music playing in the background? Just want to make sure I'm covering all the technicalities to make sure that everything's working properly. And if you hear the music, do you also see the visual on the screen? All right, for sure. Is it is the music too loud, or is it a good enough like volume? There's a little lag. There's gonna be like, I think it's like a 7-second lag, something like that. So keep that in mind. Also, is the quality of the chart, is it clear? If you could confirm that with me too, I'd appreciate it. Okay, for sure. All right. So what we're gonna start with it's gonna be, because considering that the month has just started, considering that the new quarter has started, considering the fact that you know the new week has started, we have to start with some higher time frame analysis, fundamental analysis. Fundamental analysis has to do with interest rate markets, intermarket relationships. It has to do with higher time frame analysis, has to do with COT, and then seasonality as well. Okay, so yo, what's up, Willie? What's up, bro? All right, so we're gonna go look at these three indices right now. So I noticed that we have SMT at the highs. We have this volume imbalance in here. And then we also came off of an SMT at the lows, but NASDAQ itself has been in a consolidation, right? And then, so it looks like potentially we can maybe see price start to potentially give us a drop lower, and it wouldn't be abnormal for price, obviously, in terms of power 3 to go higher, sweep out some buy side liquidity to then go lower. And the reason I'm saying that this could be a possibility as far as price falling is because when we look at the DXY, okay, let me get this in. So when we look at the DXY, if we go to like a higher time frame, right? We basically see this order block here. We see a potential shift in market structure, right? And then prices basically so far has respected this order block. It doesn't look like we're really willing to go lower. And what can I use to help me trust this? Well, it goes back to what I just said in the list of things that we have to be doing at the start of each month, at the start of each week, and at the start of each new quarter of the year. And that has to do with the interest rate markets, right? So let's pull this up. If you guys are not familiar, oh shoot, whoops. If you guys are not familiar with the interest rate markets and how they impact price, specifically the T-bond futures, these and the bond yields have a specific impact on what the DXY does. And then what that impact does is it reverberates through, of course, the DXY and then to the asset of your choice when you're trading the US markets. So in terms of the significance between both of these, the T-bond futures generally does the opposite of what the DXY does. So in terms of us trying to see DXY go higher, in this case, this is exactly what we want to see. But we don't want to start seeing discount arrays holding a support in price. We want to start seeing price slice through like the midpoint. We want to see like this wick have no respect. We want to see this volume imbalance potentially act as resistance. And then that would kind of assist us, right? So how can we further amplify that, or like the trust in that specific way of thinking? Well, you can use now the yields, the bond yield markets. And as ICT teaches, currencies chase yield. And so if the DXY is going to follow anything, right, if there's like a bloodline to what the DXY does, it's going to be the yields and the relationships the yields have with the T-bond futures. Okay, and of course there's really deep details that we could get into as far as like, you know, the technicalities of everything related to this type of analysis. But to keep it as simple as possible and as applicable as possible, I just want to give you guys an understanding of what the use case is on a week-to-week, month-to-month basis in terms of this portion of fundamental analysis. Okay, so again, like I said, the T-bond futures does generally the opposite of what the DXY is going to do. And then the yields generally go one direction and the DXY likes to follow it. Okay, so I'll give you guys the, I hope you can see what this says. So these are all the interest rate markets you're going to want to have basically on your list, right? So take a minute and write these down or go and add them to your symbol list. And then we'll dig into kind of, you know, more of an analysis to what this is doing and then how that'll translate, or how that's going to help me and you guys trust potential bullishness or not trust potential bullishness at, you know, at a particular time, if that's the case. So again, these are the yields, and then these are the T-bond futures. There's a 5-year, 10-year, and a 30-year, which the 30-year is the one that basically looks like this, the T-bond futures. And again, there's deep technicalities that we can do in terms of the relationship of all of them, like the different, you know, the 5, 10, 30, you know, and SMTs related to that, so on and so forth. But I can make a video about that if you guys need it. And of course, ICT also teaches it on his channel. But if you guys maybe need a different perspective on it, or just, you know, you want my 2 cents, I can give that to you as well. I have no problem doing that eventually. But yeah, so again, the T-bond futures is the opposite of what DXY does. And then the yields generally dictate where the DXY is going to go. That in turn translates to what potentially occurs in the indices in terms of risk on and risk off, like the whole relationship, you know, between all the assets, particularly the DXY and the US currencies. or the US assets, right? So we can basically see how there's these equal highs up here. All right, and if we go to the weekly chart, maybe it'll give you like a little more clarity. But we see this order block here, right? Prices came down into it. We see this wick has been respected. The midpoint of this wick not being taken out, the fact that we came off of this fair value gap, the fact that also this inversion fair value gap is acting as support, and we have these equal highs up here that are pretty obvious. It seems like this is potentially going to want to continue going higher, you know, maybe for the week, maybe for the month. But for now, it seems like, in my opinion, the week at a minimum could potentially get us up, you know, and at least attempt to get these highs. And again, if that's the case, we can trust the fact that, you know, like I said about the DXY, we could trust the fact that this order block should hold, and then we could potentially attempt to attack this this high up here. You know, so with that being said, do you guys, well, before I move forward, do you guys have any specific questions about this? Or does the relationship make sense and how you would apply it to your trading? Like, does that make sense? I hope it was simple and clear enough, because this is very, very powerful. It's a deeper level to understanding bias, right? Because everyone asks, how can I trust my bias? How can I trust this and that? Well, this is one of those ways that you can go ahead and, you know, start trusting the direction that you choose a little deeper, instead of just, you know, oh, is this one asset moving higher or lower, or if there's PD arrays, so on and so forth. Right, it's something that you mix on top of things. All right, let me know in the chat if that makes sense, so we can move forward. So yeah, again, I'm trying to see this not show any respect on this order block, because that'll give me a deeper conviction. And then of course that should translate to this basically just being a run higher to go to a discount, which you could see here from low to high. Price retraced, we left these equal highs, kind of use this weekly fair value gap over here as a you know, like a so-called resistance level. You got to think about what retail traders are thinking right now as well. You can kind of see how these are equal highs. It's pressed off of it. People are probably thinking that's strong resistance. Well, guess what? That's beautifully primed for those traders to get, you know, to get their ass handed to them. So, and then of course there's SMT here as well, at these lows, in this 30-year and the 5-year. These are basically the same asset class. There's just different time intervals for the data, and again, there's a deep explanation or use case for merging them all together. But again, we're gonna just keep it with the relationship. And again, I hope that made sense with what I've described so far in terms of the use cases of these and how to apply them in a pretty simple way to help specifically with bias, right? So with us thinking that the yield should go higher and maybe attack these equal highs here that were left, basically primed liquidity, and this looking like it wants to potentially go lower. It's basically when you go from high to low, prices came to a premium, and then price, like I said, it could want to reach down to here, which is what I'm assuming is going to potentially occur, unless of course these discount arrays begin to hold price, and then we start getting displacement to the higher, to the upside in terms of this, which should, if it is to happen, make this one go lower. But that's just that's the opposing contingency plan, right? So I'm sticking to my convictions as far as whether price is going to go, you know, up here, right, and reach for the buy side. So how does that translate to the DXY? Well, again, there's this order block here. Prices reach down. Prices basically moved away from it. So again, my conviction is going to be potentially this high wanting to be attacked. Okay, so we'll see if that comes to fruition. But moving along. Okay, so for the DXY, we also see not only the high that's up there, right? We see how prices basically came off of this breaker. Prices came off of this fair value gap. Also, that's in conjunction with this order block. Let me check something real quick. Okay, so there's this order block, right? There's overlapping discount arrays that prices reach down into, and given the convictions from what we just looked at in terms of the more fundamental analysis side of things, in terms of the intermarket relationships between the interest rate markets, which go hand in hand with the DXY, I feel like this bullish bias has a lot on the back end going for it. Okay. And then there's some other things I wanted to pull up as well. So let's pull up this real quick. See the S&P. April. So April here for the S&P. It does have potential bullish seasonality, but when it comes to seasonality, that's another thing that I can do a lesson on if y'all need it. But again, it's taught in ICT's concepts, right, on his channel, in his vast library of concepts. But sometimes people just need a different perspective, not taking away from what that wonderful man has created and given to us all for free, right? But yeah, so there's a potential for April to do a drop lower. I personally, given the price action we see, given the interest rate markets, given the fact that all of the rallies that we see in all these U.S. markets are they are absolutely fake. Because I mean, you look at the U.S. economy right now, there's nothing to be excited about, right? Especially be at massive all-time highs nonstop. But yeah, this is something to consider. But of course, the price action in the chart needs to confirm. You never just go off of fundamental analysis itself and then try to make a decision. You have to wait and let things play out. Let price talk to you. Let it speak to what your analysis is saying, and then act accordingly to that. But yeah, this is something to keep in mind. Let's go look at the DXY. So April, right? The DXY starting in April looks like there's a potential for a rally, but then overall, generally over the last 39 years. The price delivery has been bearish, but again, we have to make the chart has to tell us what it's actually going to do in relation to the analysis that we have and that we're going to apply. Sorry, I got this stupid freaking ad irritated me. Okay, let's pull that back up real quick. So yeah, you never make your decision based off of just what fundamental analysis is doing. Okay, you got to consider what it's doing, but then also let price tell you what it's going to do. Okay, so you got to let time pass. Fundamental analysis, especially like the COT and all that stuff, a lot of it's lagging, and it has to be confirmed in the price delivery in order for you to, at least from my experience, to trust it. All right. So yeah, with that being said, let's look at, okay, so we got the DXY, we got our assumption as far as what we think the DXY is going to do. Okay, so again, that should translate to what the indices are going to do. And in terms of, where we're currently at right now, I mean, we've already dropped below Sunday's open price. There's a new week opening gap here, right? So it's Friday's close, Sunday's open. We could see how prices danced around in that gap that was created, and it's acting as support. Okay, and then we've rallied away. So we got to observe as price moves, because we have NFP week this week. We just got to be very cautious with our engagements. Yeah, don't ever be a gunslinger anyway. You want to be a sniper, right? You got to be disciplined. Not having discipline is the downfall for many. right? So before we get onto those lower time frame charts, we're going to observe the three indices. Oh wait, this is, let me pull them up. Okay. So again, given the fact that we just analyzed the deeper relationships with the interest rate markets against the DXY, and we assume that price could potentially be bullish still for the DXY, not showing any reason for it to turn around just yet. And it's of course the new month. We want to look at these three as well, and right away, if you've spent any time with ICT's concepts for a decent amount of time, you can automatically see that there's pretty much an SMT here. Okay, so prices basically came up and now it's came off of that SMT. We have this gap here, so I want to see us go lower, get us below that to further confirm, or kind of just get us comfortable with the fact that price could want to seek lower prices. And then if price ends up smashing through this swing low, that would be a daily shift in market structure, which could then, if DXY continues to go higher, be the starting point for us to see price maybe attempt to reach down and reach maybe this fair value gap or this midpoint of this wick or any of the quadrants in that wick. Looking at this chart, each of these candles is a daily candle. So each of these lows is a previous day's low, which is near-term liquidity, especially the last 3 days. So if prices go into drop, given the relationship we've just dug into with the DXY, then those would be on the list for liquidity pools near term, so we can have reliable targets, especially if this SMT holds and DXY continues to go higher. All right, so with the backdrop of that out of the way, let's start getting into more of the inner technicalities with the lower time frames. Okay, so again, don't lose focus of what you see on this daily chart. Okay, because higher time frames king. Price in the DXY did come off of this daily volume imbalance, which I did call out in my private group, and we've basically now came off of that. Again, this order block here is holding. We also have volume imbalance in here as well. But from what we see in DXY, it looks like it's going to continue. So with that being said, we want to anticipate as the week transpires, us possibly seeing lower prices in the indices. Okay, so now when we drop down to this lower time frame, we could see how that has potentially already started at this point. It looks like we have now ran up, stopped out, or taken out the stops to the buy side. We do have a potential shift in market structure here. Again, it's not even the open yet. It's not even 5:30 or 8:30 Eastern, 5:30 Pacific Standard Time. I'm on the West Coast. But yeah, so you want to wait till time comes into play, because if you're trading before, say, 9:30 Eastern, or trading before, 8:30 Eastern, one of those two, you're basically trading ahead of the manipulation. Okay, and that's why these times are highlighted by ICT, and that those are like our times of engagement, or at least observation. Because if you look at things before that, you may get tricked, especially if you're not a higher time frame, like you don't like to use the higher time frame, and you're one of those 1 minute warriors that wants to think that the 1 minute's going to get you in quicker. It does move faster, but if you're not in line with the higher time frame, you will absolutely get your ass handed to you. Right? There's no simpler way of saying it. And before 8:30 Eastern and 9:30 Eastern, you're trading again ahead of the manipulation. That's why if you've entered trades and say price stopped you out, but you entered before the open, but then it goes in your direction, that's why that mistake or that error keeps happening, because you're trading before the manipulation. And basically, if you're doing that, you're breaking the rules. Also, if you're actually trying to follow the models that have been provided. So it's very important to keep this in mind, because a lot of people don't realize that, especially new traders, like they'll get in, get stopped out, then they'll be fearful and won't get back in, not realizing that they were potentially correct in their draw on liquidity. They just entered too early. basically before the manipulation. So they became part of that manipulation leg, and basically became the liquidity, right? So yeah, again, this looks like to me potential shift. So this could be the start. It does run the risk of price running up into potentially this fair value gap here. If we are going to be super bearish, I would like to see that actually not be tapped into. I'd like to see that act as a breakaway gap if possible. That would just further confirm, especially not being able to get to this weekly wick here, which I could pull up as well. Take off some of the... So the weekly wick is here that I was pointing to right now. Okay, that what I just showed you is this here. So when it comes to price delivering, when you see price going, say, in like a bearish direction, when price comes back, any of the up wicks, like if there's a wick that goes higher here, any up wick in a down move can act as a premium array. And then same for if price is rallying and there's down wicks occurring, the candles will print into the wicks, preferably respecting the midpoints, right? So if it was a bullish move and price was pulling back down into a up wick, like say this one here, if it comes back down into it, we want to see the midpoint act as a discount array, right? It's a very powerful observation in terms of institutional order flow when price is actually delivering. It's so helpful, right? So yeah, my bias, just to get that known, is going to be potentially bearish, again, because what we saw in the DXY makes me feel like we could trust it. There's multiple factors layering on top of the assumption that we will see price potentially start to topple over, essentially in the indices. Especially, again, we're at the beginning of the month, right? We're at a new week. It's NFP, so things can totally be disrespected. But in terms of just the overall conditions that we're in right now, I feel like that's going to actually be the case. So as we move forward throughout the week, come back to this video and observe what was said and whether that assumption was correct. Also journal that in your journal, and keep a rolling log as you should, to just analyze week to week, month to month, day to day even, right? So yeah, so let's just sit and watch this. If you guys have any questions, definitely let me know in the chat. We're before the open, right? And again, part of the rules, at least my rules anyway, are I don't take any trades before the manipulation occurs, even if it looks beautiful, because in my journey, that's been where most of the potential losses have occurred. And we're always going to experience losses. None of us are perfect, and none of us will be either. So it's something to be expected in terms of that aspect of things. So give me 1 second. So another observation, we could see that there's a lot of new week opening gaps in here. If we have multiple new week opening gaps layered on top of each other, generally that'll most times act as a pretty strong area of either resistance if it's gonna go lower, or strong support if it's gonna go higher. But again, the assumption is DXY is gonna continue going higher, given the early analysis that we just did, and you could see that actually come into fruition. And then of course that translates to the indices dropping lower, as you can see here. So what we're looking for is to now start to see these premium arrays hold as resistance. Yeah, let's go to, so in the 1 minute we could see how there was a shift in market structure, right? This is more in London. So this here is the London's high right here. So let me actually, so you're probably wondering what this box is right here, right? This here is just basically outlining premium and discount in the current range that we're trading in. So equilibrium is down here. So if price is going to sell off from here, we go from premium, aim for a discount array. Where's discount? Where's the discount array? Well, it's down here. This daily fair value gap. The rest of that. So smart money pairs their orders with buy stops, and then price drops lower into a potential discount array. So it goes from premium to discount, right? So it positions their sells with willing buyers above buy side liquidity or at a premium array, and then it ends up targeting discount, which is the place that they would offload their positions. So yeah, that is in fact the case here. Oh yeah, I forgot to pull this up too. And again, none of this is financial advice, all for educational purposes only. If I take an entry, doesn't mean you take an entry. You have to do that on your own free will and your own decision making, right? So yeah, with that out the way, let's continue to observe. So again, the daily order block that we observed is obviously holding. So we're going to see if that continues, right? So I'd like to see us potentially retrace, preferably get us up above this swing high here if we could. And why? Why would I want to see that? Because ICT has taught that when a big move is to occur, when price moves, generally it does this type of action here. It ends up sweeping out a low to then pursue whatever liquidity it was going to initially reach for. So we can see how we swept this low and rallied. Well, I want to see us potentially sweep this high and decline. If we break out of this fair value gap, we may not come back. But again, we're ahead of the manipulation. So the manipulation during the open price, right, at 8:30 Eastern or 6:30 Eastern, that could easily, very easily wick up, tap into this premium array here. If you go from high to low, above this high as a premium for this small little range here, and then it could continue to go in the direction that we've been assuming it's going to go, which is bullish for DXY, bearish for the indices. So I hope you guys can see the visual like clearly, right? And if you guys want some cool indicators, some solid indicators, definitely check these out here. So preferably the ICT everything one has like open prices and a bunch of other things, central bank dealers range, Asia, it's got days of the week, which is very important. And a couple of other things, you can go look at it. Then I got you don't need this one right here, but you can get the fractals indicator, shows you the 3-bar fractals that ICT teaches about. Nephew Sam, the creator, I believe is an ICT student. He has a lot of good indicators. None of these indicators make you make a decision. It's all to plot things, to consolidate your thinking. All right, so just some things to consider. So yeah, looks like things are going to script, right? So again, we see price coming off these highs. Right, this is the S&P. There's an SMT at the highs, right here, from high to high, from high to high. DXY is being assumed that it's going to go higher, and we can see how that's actually being the case. We see that not only is the S&P falling off the high, which is a previous week's high, so we've pierced previous week's high. I'm assuming that we're probably going to try to seek previous day's lows. Right, at the very minimum, potentially this low here. The last 3 days lows are important. I mean, we could have considered London's low, but London's low is here, and it's already been basically utilized. So yeah, I want to see price go higher to go lower though. So again, there's nothing really to engage. You got to follow your rules. You cannot be like not disciplined and just try to wing it. You can't just wing it. You can't just say, oh, it's moving lower, so let me get in. No, what's your model? What are your rules? What's in play? Does it make sense for you to even do anything? And if your rules state, like mine do, that you don't take trades before the open, you need to be disciplined. I don't care how you feel in the moment. I don't care what's going on in your life. I don't care what you need to make money for. You have to realize that not following your rules is going to be the reason why you don't succeed. The high percentage of people failing has to do with them not following a rule-based system. a rule-based set of principles, and actions and being organized. I say this to my private group all the time. You know, you will fall to the level of your systems and your level of discipline. If you don't have discipline, when things are rough, when things are hard for you, you're not going to have nothing to fall onto. You're just going to fall off the map, So you want to make sure you're focused on that early on. Entry models and all this analysis, none of that matters if you're not able to tell yourself you're going to be disciplined and then actually follow through with that discipline. Everybody gets so blinded by the potential for profit, the potential for, whatever the fantasy is or desire. That's the reason that they started trading. They get their vision clogged by that, not realizing that there's a true way of doing this as a professional. You can't come in thinking that you're, anything special, right? You can't act like you're better than anybody else, right? Everybody faces losses no matter who you are. And again, you'll fall. You'll never rise to your full expectations, but you will end up falling to your level, the level of your systems, how organized you are. That doesn't mean you can't accomplish your goals, right? That doesn't mean that you can't do something amazing with your trading. But you still gotta be sober when you're looking at this stuff, right? So again, the bias I called out has come to fruition. I said the previous day's low is here, right? So it seems like that bias is in fact playing out as I said, exactly how I said, given the factors that I said, right? From the interest rate markets to how that affects the DXY to then how that correlates down to what has transpired here in the NASDAQ as well as the DXY. Go look at the chat real quick. Yo, appreciate, Joseph, bro, appreciate you, bro. Appreciate the follow, or the subscription. But yeah, if y'all got questions, let me know. We're ahead of the open. We got news. That's one thing I didn't check, was the news. We're coming off of Easter, okay, the holiday. So, like I said early on, you don't want to have too much crazy expectations. Right, you want to be very calm, right? Don't be coming in here acting all crazy. Yeah, no worries, brother. No worries. You just installed that indicator. Which specific indicator are you referring to? The ICT everything? Is a central bank dealers range? Yes. CBDR. That's a central bank dealers range. It's called the central bank dealers range. Perfect. Yeah, pretty good for the first live stream. Calling price doing exactly what I say. It's a typical thing, you know what I mean? I'm not perfect. I like to be very realistic. Some of my private group has been with me. The people that are in there, they've been there for over 2 years at this point. I keep it pretty small. I'm not out here chasing, anything other than excellence in trading, and then trying to help you all do the same. So That's the type of vibe you'll get from me. Oh yeah, let's go look at the Dow. Yeah, the Dow's doing everything, see? So everything that we have discussed so far, I hope that it made sense in terms of the, applicable analysis on the interest rate markets and how that can help you trust in the DXY. Because clearly, right, this has fallen. Look at it. Look how much it's actually fallen. The T-bond futures. I said we don't want to see this act as any type of support at all. I said that there's SMT down there. It came to a discount to go higher. We could see how that is in fact the case. It's playing out beautifully. And again, when you follow your rules, you cannot deviate from them. Sometimes you'll be able to, bend the rules a little bit. But especially when you're new, you need to tell yourself a set list of rules and protocols that you're going to use. And then also, like different processes, like the analysis wise. And then you have to follow them. And you have to focus on one model. And why, right? There's hundreds of models at this point. Why do you have to focus on one? Well, whenever you're doing a job, do you do 50 jobs at once and try to calculate how good you were at all 50? Right? Wouldn't that be damn near impossible? Right? You focus on one aspect of things, one way of doing things, and then over time, you analyze whether that was actually effective or not. Right? So then not only is your data more accurate, you'll also, have better analysis, right, of your performance and whether whatever you're trying to test has worked or not. Otherwise, you're not going to know what the hell is going on. You're not going to know if you're making progress. You're not going to know if something works because there'll be too many conflicting things going on. So yeah, my potential target is going to be this low. This low turns out to be a previous day's low. All right, so there's a list of liquidity pools that I want you guys to mark down. Okay, I did do a video and I left a PDF showing them. But since we're approaching the bond yields open, like the bond market open, which is 8:30. But I'm gonna most likely wait till the next open price and then possibly the silver bullet time window. So while we're watching what price does here, let me pull up this list of liquidity for you. Alright, so this is what I sent to my private group. I send this every month to my private group because it's what you have to do. Bunch of considerations. And you're going to want to take either a screenshot of this. I hope it's big enough for you to see it. But you're going to want to save this. Okay? And then as you're back testing, as you're looking at your model, as you're doing things study-wise, you're going to want to make sure that you keep this stuff in consideration. Okay, depending on what condition we're in. Are we changing quarters? Are we moving into a new week? Or whatever the case may be, there's a process that has to be associated. And in terms of every week, right, you want to do all this stuff and keep all this stuff in mind, so you can get a feel for the it says the second quarter. I think we're whatever. But yeah, you want to keep this whole thing in mind. This is like a process. It's your weekly process, a part of it at least. All right, so take a screenshot of this, save it, and then as you're back testing, keep this on a little notepad next to you, and then just observe. Right, these liquidity pools are very important. Today we've talked about previous week's high, previous week's low, London's high, London's low, as well as previous day's highs and previous day's lows. Right, and it's Monday's trading, so we want to also keep in mind previous session from Friday, those highs and lows, because those will be used as near-term liquidity. And I mean, it only makes sense, right? Because that was literally the previous week. So near-term liquidity, right? It's going to be in line with that, right? So keep some things in mind. Again, for those who are just hopping on, we basically have been pointing out the fact that DXY is going to go higher, and the indices in turn should go lower, given the analysis. I'm not going to break all of it down again, so just maybe watch the video again, just to see kind of like how we arrived at that decision, and then how beautifully things have delivered since. So again, we're at this order block. Price is raging towards the previous week's high. I know it may be a little hard to see because there's the letters are so small, but we're basically watching how price is reaching for that. And again, we have this daily volume imbalance. We don't really want to see it when it does get up there. We don't want to see that act as resistance too much. We want to see things slice through like butter, just like this is doing at the moment. And again, there's SMT at these highs too, right? And that SMT at these highs, between the, here, watch, let me maybe get a little closer so you can see it. You see this? That is a higher high. You go to the 10-year and you see a lower high. Okay, and then you see another lower high here as well. So again, this is opposed to DXY, and this is what DXY follows because currencies chase yield, and these are the US dollar bond yields. So it's an interest rate market. And again, what we said was going to occur has actually occurred beautifully, not respecting anything that has to do with any discount arrays. Prices came from high to low, came to premium, and then prices now attacking lows and breaking through discount arrays, which in turn has led us to seeing DXY race higher because the interest rate markets are that important. Okay, and again, the target is previous day's low. This was a potential YouTube model, but it was in London. London has already been, basically pushing us lower. So it's not abnormal for us to potentially see when price opens, maybe around like 9:30 or 8:30 Eastern, right? 9:30 Eastern or 8:30 Eastern. It wouldn't be abnormal to see us want to rally up to try to stop out whoever's been profiting, to position smart money once again to go lower if DXY is going to continue and follow suit with what we've already discussed. So that's what I want to see. I want to see us attack these lows. There's relative equal lows here as well. And then there's still a portion of this fair value gap as well. Appreciate y'all hopping on. This is the first live on YouTube. We will be doing this, 2 to 3 times a week, and then probably do like reviews at the end of each week as well, kind of reviewing what the engagements look like, and then probably answer some questions as well on like maybe Sundays. Yeah, if y'all got any questions, definitely leave them in the chat box. If you've been getting value so far, definitely consider showing your boy some love and subscribing and liking this video. It's definitely it'll help me get in front of more people so they can see and then they could hop on. We can hang out, right? We're friends. So yeah. So we see this fair value gap here. I'd like to see us stay below this fair value gap midpoint, turn that into an inversion. And then that's all in the context, again, of us trying to see price go lower in the reach for this previous day's low. Which again is right here, right there. And then I think I mentioned that on the S&P, oh, well, if we're looking at the NASDAQ, the previous day's lows here. I think I mentioned earlier, I can't remember if it was on the S&P. No, it was on the NASDAQ, that if this swing low breaks, that would be significant. That would be a shift in market structure, especially if it chooses to fulfill the rest of this fair value gap down here with a one-sided candle leaving another fair value gap. I think that would be beneficial, especially if DXY goes higher, as we assume it's going to continue doing. That would be super beneficial, and that would give you an even further, like even further clarity as far as, you know, us potentially toppling over at this point in the S&P, the NASDAQ, so on and so forth. And then if that does happen, consider this, right? Just think about this. We're in a new quarter. Price has been bullish. If price shifts in market structure here, right? Wouldn't you be able to consider that as a possible quarterly shift? Because it's a new quarter, right? Every new quarter, sentiment generally changes, right? And if everything overlapping gives us significance in terms of that happening, you know, it just confirms it even further, right? So we've ran stops. So if you're thinking YouTube model, we've taken out buy stops. If we get a shift in market structure here, that could present a daily time frame YouTube model, and then we could potentially seek, like I said, the rest of the fair value gap here. And then of course, before that happens, we have the rest of this fair value gap potentially. Then we have this swing, or this low here, which is a previous day's low. We have this low here, which is a previous week's low. This shift in market structure would be a previous week's low taken, which again, if you come back to what I said about this list of liquidity pools, you can start to see the significance of these liquidity pools. And remember I said, remember how it says Friday's low if we're trading on Monday? Friday's high and low? Well, we've taken Friday's high because Friday is this candle. Well, it was a holiday, so this is the one that we would reference. But generally this would be a Friday, right? The Friday's candle. So price has taken that, and it's now rejecting. There's SMT at the highs. DXY looks like it wants to be bullish. And before we get to this fair value gap or even this low, right, it would have to attack previous Friday's low, right? So you start piecing these things together, you could see how this helps you with liquidity targeting. These are significant liquidity pools, right? And if you're, you know, a lot of times we're thinking like, where's price going to reach for? What is it going to reach for? Well, price is going to reach for one of these liquidity pools on a daily basis. Some are more near term, like London's high and low, that's a session high and low, or the previous AM or PM session high and low from the previous day, if we're on like a different day, not Monday, right? Like those are all potentials for targeting. So you want to keep that in mind, right? Because none of this stuff is random. Mind you, these liquidity pools are here every single day. That's why you'll always have a potential opportunity. Doesn't mean you'll take a trade and win every day, but still, right? This helps you understand that you don't need to worry about opportunities not being there. What you have to realize is what we've discussed today in terms of discipline, being organized, having a thorough analysis, having thorough processes, following your rules. You know, can't just be reckless like a gunslinger, just taking every possible entry at every candle you see because it moves up or down. You know, there's a systematic way of doing things that you have to obey. All right. So again, if we were going to possibly take an entry, you could take a high risk entry here. Again, not financial advice. This is all for educational purposes only. But if you were to engage a demo trade here, right, take an opportunity, if you know, this could potentially, if we're really heavy and DXY continues to go higher, there's a possibility for this to reach into here, maybe fill the whole thing. Preferably, if it was to leave this and attack the low, you'd preferably want to stay below the midpoint and then drop, because that signifies weakness, right? If it can't even fill the whole fair value gap, and especially if we could stay below this inversion fair value gap's midpoint, that would be beautiful, right? And then you take a look at, let's go to the NASDAQ. So if we go from this high to that high to this low, right? Equilibrium is right here at this low. Yeah, so this low here, this previous week's low, that's equilibrium from this high to that low, which is our current range. So right below that previous week's low, which is here, right? Previous week's low. Right below that, it's equilibrium, which we have that marked out here as well with this this box here, right? And again, I'm trying to seek potential sell side. So there's a lot of things overlapping in terms of reasoning as far as why we could potentially reach down into there. So I hope that makes sense. If you guys got questions, definitely leave them in the chat. And yeah. So what would invalidate my perspective here, right? Well, in terms of the potential scenario we're looking at here, what would invalidate it is if price sweeps through all these fair value gaps here and does not reject from like around this high, and then DXY would have to fall also, and then that, you know, that would potentially invalidate, right? I'm more on the side that, you know, we could potentially see this attack what I'm aiming for, right? Again, you don't want to hold on to anything too tightly. It's NFP week, right? Anything can happen on these weeks, on any day, right? So do you expect price to reach into that sell side today? Yes. So if you weren't here at the very beginning, I did break down exactly what was happening. I'm assuming that price is going to go higher with the DXY and then potentially see us reach the previous day's low or the previous week's low for today. Most likely, you know, it may not reach down to the previous week's low. It's NFP week, right? So volatility could be very limited or wild, right? So we always want to have that lens up in our face when we try to engage weeks like this. But I'm assuming, given what the analysis was at the start of the video, in terms of the fundamental analysis we did and then how price has delivered so far, I'm assuming that we should not see price want to come back, you know, higher in any large capacity. We see SMT here, right, between the indices, right here, this high, that high, higher highs, and then of course the NASDAQ made a lower high. It looks like we're respecting those areas. We have a bunch of new week opening gaps layered here. Looks like that was also respected. So unless this fair value gap, it gets sliced through, that would be, you know, one red flag, right? If this high is taken and just doesn't stop, that's two red flags. And then if a fair value gap up here is just getting slammed through, plus these new week opening gaps, then we know our bias for the overall day is incorrect. No problem, Maddie. I appreciate your question. I appreciate you hopping on too, bro. So yeah, a couple weeks ago in my private group, pretty much I called out this potential, like this price structure here. There's a consolidation. We have an accumulation, reaccumulation, potential for smart money reversal. Then we got our first stage distribution. And then once we get up into this candle here, it should be potentially, if this is a market maker buy model, which is what I'm assuming, what I've been assuming, I mean, since February, to be honest. Like, if any of my private community students hop on, they can definitely attest to that and know that, this has definitely been on our radar. And now that it's actually been delivering, seems like that higher time frame analysis we did back in, I believe it was either in end of January going into February, seems like that would be actually coming into effect, which would be amazing, right? That was like super long-term forecasting, so those types of things are going to now happen on YouTube as well. You guys have, given me a lot of support the last couple months. I went from 500 subscribers to literally almost 2,500, which is insane. So I couldn't be more grateful for you guys hopping on and just supporting the content. You know what I mean? So as a thank you to you guys, these live sessions are going to be consistent, so then I can help you guys, regardless of whether you're in my private group or not. So yeah, and no worries, Maddie. Appreciate you, bro. It's people like you guys, basically that are basically the reason I even make content. I could just be doing what I was doing early on and just, trading in my house full time just by myself. But, as you guys know, if you guys have spent a little bit of time trading, even like a year or so, that this gets pretty, intense with the secluded scenario and how trading is a very lonely sport, so having like-minded people that are willing to learn, that are dedicated just like you, it makes your passion and love for this industry a whole lot more, and it's just more enjoyable, plus you can help people, and then you get to see others grow as a result, and help them overcome different things they struggle with, and then you see them succeed, and it kind of brings back how things were when you first started, when you start seeing consistency, just like ICT says, it allows you to relive those moments of astonishment, like holy crap, like I can see where price is going, like this is actually possible, and just seeing that happen in other people, it's a feeling that can't be described, really, because you're helping somebody. You never know what people's situation is, especially now, like times are rough for a lot of people, so if you're able to help them keep that hope, keep that passion in this thing we call trading, right? I feel like it's a huge service. Plus, there's a lot of noise in this industry with a bunch of people that claim they know what they're doing, but would never even hop on to do something like this. Like they wouldn't even hop on just to show you that they know where price could potentially go. Yet they're over here trying to extort people, and then puts a bad taste in people's mouth over this industry, which is unfortunate, And then think about this too. There's a reason school doesn't teach us about this stuff, right? There's a reason that they don't. Because if everybody could just trade, I mean, just imagine, right? It may have some effects on society because people wouldn't want to go to work, but it's very powerful, So yeah, let's see what's gonna occur. Again, we're before the open price, which is 9:30 open Eastern time. We've already passed the 8:30, and for those of you that don't know, the 8:30 open that ICT mentions has to do with the bond market open, right? So that time, sometimes there's opportunities to form, yes, if you're trading the YouTube model, or Model 13, as he's named it, which is better than just the YouTube model, right? Like, because the YouTube model can mean anything. He's taught so many models. But yeah, that those two open prices we want to observe. Anything again before 9:30 open is the manipulation. And the 8:30 open price generally becomes important as far as entry, like reliable entry scenarios, when there's potential high impact news events that occur, because then manipulation may happen there, right? So for those that don't understand that difference between those two open prices, there's the difference, right? They pretty much get used in a similar fashion in terms of Power 3. And if you guys haven't watched my Power 3 series, you definitely want to go check that out. I've gotten a lot of good feedback on it, so I hope maybe you guys could get value from it as well. But Power 3, in terms of Power 3, those open prices, they act very similar. But again, for the one that's the bond yield open, or the bond market open at 8:30, you want to make sure that when you do choose to try to, when you try to engage around that, or try to do your analysis to engage around that there's a high impact news event. Otherwise, again, you're trading before the manipulation at 9:30 Eastern open. So just some considerations in terms of the differences in application with those open prices. I know that's a common question I hear people saying, because there's like the daily open, the 8:30 open, the 9:30 open. Like, what do I do with all those things? And they're all used in a similar fashion, all relating to Power 3. So no matter what you trade in terms of your model, especially if you're an ICT trader, you want to make sure Power 3 understanding is in your toolbox. That's why I made a series. That was like the first one I made as I've come back to YouTube. There's a reason, right? It's one of those foundational things. And I have a lot of other foundational things that I'm going to be making as well, just to try to amplify and give my 2 cents on the amazing topics that we have been exposed to. So yeah, I want to see this potentially hold. You notice how I'm not on the 1 minute chart? You notice that? Right? Because if you live on that 1 minute chart, you can't see the full scenario of what's happening. You're not going to be able to truly see what the true story is. And you could, like I said earlier, get pulled into the manipulation, especially if you're on the 1 minute before the open prices. Like, you're just asking to get tricked, right? You're asking to get totally fooled. So don't be the 1 minute warrior, right? When you analyze things top down and you have an understanding of what you're looking for, right? And the price gets to a level that you're looking for, then you can go down and really try to dig in for precision. The lower time frame 1 minute chart, generally those time frames are used for precision and entry. After you have come up with a framework from these upper 5 minute, 15 and beyond, those time frames. That's why ICT says get the framework from the 15 minute or the 5 minute, and then enter on one of those lower time frames when things have been fulfilled. So that's a portion of things that I feel like, given the questions and things people have come to me asking, that's something that people overlook, right? Because this stuff's easy, right? Apparently, it's easy to see it, but you still got to understand how things operate, especially with time, because the YouTube model could form outside of a kill zone, and you may think it's time to enter, not realizing that the algorithm moves on time. So another thing to consider as we press forward through this session, ICT macros, those specific moments in price, which are the last 10 minutes of an hour starting at 8:50 Eastern to the last hour of trading. The macros on the last 10 minutes from 8:50 like, and then up to the first 10 minutes of every hour, which in that case from 8:50 would be to 9:10 before the actual open price, all the way up to the last hour. Every last 10 minutes to in the first 10 minutes, that 20-minute window, you want to start back testing that. Because if you find your model and you're trying to enter price, if you don't want to be stuck in consolidation and shit that just doesn't move, then you're going to really want to put yourself in position when price is going to actually move. And price generally moves, or spools, as they say, right? It runs in direction of liquidity based on those times. And if you go back test this, you'll see, like, oh snap, I took an entry at, let's say 9:32, right? Or whatever random number that's not the last 10 minutes or the first 10 minutes of the hour. You'll see that a lot of times manipulation will also occur, and then price will book it. It'll go quickly during those times. It'll start to expand fast, right? So the macros, the significance of those macros that ICT shared with us, they're very, very important in terms of timing, right? So backtest some of your, or analyze some of your last trades, and then try to observe like when you took the trade and what happened in relation to what I just, pointed your attention to. And you'll see, you'll be like, oh snap, I should just waited, right? I should just waited because it went in my direction, but I got stopped out, right? And that's generally, at least from what I've observed from my own mistakes, that was one of those things, as well as trading before the manipulation in the daily range, which is what we're looking at right here. We're watching up into the open to observe that, right? So just those are some of my rules, two of my most important rules, specifically pertaining to time and the engagement I move forward with in terms of time, right? So yeah. Give me 1 second. I'll be right back. Give me like a couple minutes real quick. I'll be right back. All right, I'm back. Hey, can y'all do me a favor? Can y'all let me know if y'all can see the live chat? Like, can y'all see it on YouTube? There's of course some technicalities I gotta iron out in terms of the stream itself, like some of the animations and whatnot. But yeah, if y'all could let me know if y'all can see the chats. No. Oh yeah, that's one thing that I have to fix, right? The live chat on the screen. But if you guys can see at least the chat for YouTube, like, can y'all see what each other has said so far? want to make sure if you keep the chat window up, yes. So do you see it currently? Like with how it is right now? Like not on the screen, but like on like just specifically pertaining to, yes, but it eats up the screen. Do you mean so it shrinks the screen a little bit, but you guys can hide it until you guys are going to like engage with the chat, right? You have the option to minimize it. Okay, for sure. For sure. Yeah, see, I got I got to figure out all the little streaming tactics, how to do everything, make it as effective for you guys. But as long as you guys can see the chats and what everyone's saying, and like what I would say if I put it in the chat, that's good enough for now. I appreciate you helping me, Maddie. So yeah, do you guys see these consecutive up candles here? We're on the 5-minute, and if we go to like the 10-minute, it should be an order block. See how that works? That's why the higher time frame is important to understand, because when you're on the lower time frames, you'll see larger time frame POIs without moving to those larger time frames. And that could be very, very helpful. It's one of those little things that experience teaches you, right? Like it's a 10-minute, and if we look at the 5-minute, those are consecutive up candles. So seeing the consecutive up candles, I know that the upper time frame, if you accumulate all of them and add them up, it basically leads to a 10-minute candle, because it's like it's on this is on the 5-minute. We move to the 10-minute, we can see how that's an order block. So now, if price breaks this low, we want to see it potentially respect this, but we have to have an allowance for price, to maybe sweep that, given the fact that we're approaching the open of the New York AM session. So we have to make an allowance for this fair value gap, this high being taken. But I preferably don't want to see, if we break this low, I don't want to see it break this order block, the high and the fair value gap. I wouldn't like to see that happen. I'd prefer to have it want to respect this and leave this as a breakaway gap. We've already basically taken buy stops, right? I think this also ran stops here too. So I want to see us try to stay as weak as possible, because then if we broke this high and this fair value gap, that's 1, 2, 3 PD arrays that would be broken, at least from this time frame. So it's not what we want to see, because there's a 3 PDA rule that's also used for validation, invalidation, and I can make a video about that eventually too. Okay, should I minimize it so you can get a better view? Okay, for sure. CJ, oh yeah, CJ, he's my boy. I rock with him. I found it's hard to follow him and the chat. I always thought it was useful. He would repeat the questions so you didn't have to keep the windows open. Oh, okay. Okay, for sure. I'll keep that in mind for sure. I'll whenever there's questions, I can just basically repeat the questions, or like ask them out loud so everybody can hear it. I think that's a good application of the chat, because I don't want everyone focused on the chat, right? We're not here to look at the chat. We're here to focus on price delivery and learn. Yeah, CJ is awesome, humble, leads with integrity. Definitely one of the few that I really, really respect. Absolutely. So yeah, so far it seems like everything that we have discussed has in fact came to fruition, right? So if that remains to be the case, then the draw on liquidity that I had, which from the very beginning has been this previous day's low and this overall previous week's low, will basically come to fruition, and then you'll have a very good study tool to basically mark off for at least Monday's trading. And then again, we'll probably be back tomorrow as well. And then I believe NFP. Yeah, I probably won't have a stream on Wednesday. And then of course we have this one as well. So I mean, Wednesday may be good. The NFP rules, which every ICT student has heard, I'm assuming, because ICT has made this very clear. Your trading should be done by Tuesday's AM session, right? A maximum like Wednesday's AM session. But I wouldn't even push it to there, especially if you're new. If you've already traded for a couple years and you already have a plan and you trust yourself with discipline and you're not going to overtrade and you're not going to over leverage, it's a different story, right? Like you can start to personalize the rules a little bit more as you gain experience. But if you're not there yet and you're still trying to find your footing and you're still trying to figure out how to be consistent and all these different things, you want to make sure that you give yourself the least amount of hazards as possible, because we're always at risk in the market unless we're not taking a risk, right? So you don't want to jump into a fire, right? And get burned when you're just starting out, because it'll scar you. It's just unnecessary, right? But again, eventually, maybe you'll want to participate. So much information. Okay, so can I share how I overcame the ICT analysis paralysis? There's so much information on the chart and correlated assets. Did you struggle to make sense of it all? So that is a wonderful question. That's one of those things that I really dig into with my private community. And essentially how you get over that portion of things is you have to start to learn what's important right now. Okay, and part of that has to do with this liquidity list here, right? Because you can go to, say, like the daily chart, and a lot of people be like, oh, well, I mean, I have this, you see I have this marked off down here. None of this is important though. I keep this for reference as far as where we've came from. But when it comes to price being here, okay, what's important right now? What are the near-term liquidity pools, the near-term PD arrays, right? And in this case, we could see that, from this low to that high, right? All of this liquidity here, or these little points of interest, are significant to me right at this very moment, right? And in terms of analysis paralysis, this is like in terms of correlation analysis and stuff like that, you do want to eventually get comfortable with understanding the term risk on and risk off, because that's just one of those like cherries on top when it comes to adding confidence in your analysis. Just like I was kind of talking about the interest rate markets, how and the applicable sense with how to approach that. Everything is interconnected, and yes, at the very beginning it seems like it's a lot, but this is why, going back to what I said earlier about being organized, having your processes in place, like you want to attempt to do that as soon as possible, because and of course it's different for every asset, right? Like if we're trading US markets, which I assume all of you guys are, if we're trading those, right, we got to pick one that has correlated assets. Like for instance, the S&P has the NASDAQ and the Dow and the DXY. And then, of course, it has the bonds, because that impacts the U.S. markets. So those are the assets that we would pay attention to. Now, in terms of, trying to narrow things down for, the risk on perspective, you just want to look at some of the assets. You don't got to do deep analysis. Just look at the general direction of the assets that impact or don't impact, but the assets that go a specific direction that agree with the risk on, risk off principle, right? The analysis paralysis, in my opinion, when you're doing like the overall intermarket analysis type thing, which is what I'm assuming you're kind of leaning towards in terms of the difficulty, you don't have to necessarily worry about all of them right away. A way to narrow things down, like I said, if you're trading the U.S. assets, you want to focus on what the interest rate markets are doing, like I discussed earlier, what the DXY is doing, and what the 3 indices are doing. And keep yourself in that perspective until you get more comfortable with your model and the way that you approach trading. Because once you have your processes in place, once you understand what you're doing, all the other things will fall into place easily, because you won't be confused off of what you're analyzing, what levels are important, so on and so forth, right? And again, coming back to what's important right now at this very moment, you want to find the most near-term things, right? The most recent swing low and the most recent swing high. The most recent, specifically fractal low, and the most recent fractal high, because those are going to be significant, right? And then what was the most recent liquidity pool, the most recent larger liquidity pool that was taken? In this case, the most recent liquidity pool was this previous day's low, and this previous, or these previous highs, as well as this fractal high here, right? So, in my opinion, the only things that really matter truly right now are the things that we see in this section of price action. So you use that, and then again, only focus on the things that impact your asset class. And if you're trading the indices or the US assets, that's going to be, if you say you're using S&P, the only things you got to keep track of are those 3 indices, the bond yields and the T-bond futures, and then the DXY. Right? Those are the only things. And then again, take time to study the impacts and relationship the other assets have, or what they should do if you're assuming DXY is going to be bullish, or if you're, which then would lead to, the indices going lower, right? What do those relationships have to do with the other asset classes like commodities, stocks, so on and so forth, right? I think that's helpful. You're looking at the most recent fractal for each of the correlated assets for your intraday setups. Exactly, bro. Exactly. Looking for the weekly, daily market maker for me. Yeah. So think about this too with market maker models. When market maker models are so dynamic, okay, they can be used as a model on the lower time frame for entries. Of course, you want to mix a pattern, like maybe the 2022 model, the run on stop, shift in market structure, fair value gap scenario, or any of the other patterns. You'd want to merge that with potential market maker model frameworks, right? A lot of times, like when I first started using that specific model, market maker models, I would use it on the higher time frame so I can get comfortable with it until I got comfortable with it on the lower time frames. But I specifically focused on it only being a framework, so I can map out different phases in a market structure situation, right, with where price was headed, and that helped me then when I went to the lower time frames to then start incorporating it as a entry tactic, like an entry framework, essentially. But then I used my favorite pattern, which at first was the breaker, right? This is how everything started. I started with the breaker, then I moved on to the market maker models, right? Then I had the institutional order flow entry drills, right, which is a continuation model. And then, of course, as of late, the only other model that I added to my arsenal is the YouTube model, the 2022 model, right? So, and then all those models, you want to keep in mind too, a lot of people don't know this, all of those models have a continuation variation to them, right? They all have a continuation variation. There's the main setup for the day, for the daily range, and then there's continuations of those models performing in a price swing, which is why you never have to worry about missing a setup, right? You may miss the first one, but keep your focus on the rules and what it looks like, right? If you found the first entry and your bias is correct, continuously look for the model on the lower time frame, as it's delivering in the intended direction towards a liquidity pool, right? That's a huge leap forward in your understanding as far as identification of any of these models that are taught. And that's another reason why ICT says you only need one model, because there's multiple variations of every single pattern or model that we use, right? And that's something that isn't highly known, which I don't understand. I do think that ICT could have made that a little more clear. I mean, he may have said something like that in his own way. I mean, but sometimes the ways that things are taught just don't stick. But of course, the messages get there. It's just sometimes, he's just the way he is, and we can't fault him for the way that he is, because he's still an amazing educator. But there's of course some little variations that could be added that could improve the delivery of certain things. But he's a computer programmer. He's a very complex individual. His thought processes are very deep. So, that's just, part of what we have to deal with. And that's kind of what I had to realize when I was first learning, because I'm not some computer coder. Like, I'm not some mental giant that, gets 4.0s and, knows all these different things. That's just not how I am. I'm just a normal dude from California, just a normal guy, right? And things got to be broken down visually, step by step. And a lot of time had to be spent for me, like just deep studying and failing and doing things wrong and making the mistakes and being stubborn and not listening and doing all the things that, I'm sure, many of us do as human beings in general. So just realizing the fact that you only need one model. You don't need to overcomplicate it, right? And just sticking to that one way of doing things, you'll start to see that there's these variations as price delivers. You'll start to see it. You'll start to see how, the YouTube model, maybe this, let me try to pull up a good example, actually, right? Let me pull up a good example. For example, got a perfect example here for you. So let's say this was the YouTube model entry, which in my opinion it was, but it was outside the session. Well, it was a London YouTube model here. Okay, well, as price is delivering, are you going to say, damn, I missed that setup, so I'm not going to trade now when I know the bias? No, you're going to look inside the price leg and see, where was there a run on stops? Well, this is a fractal high, is it not? This is a shift in market structure below a swing low, is it not? So when it returns to a fair value gap, there's the YouTube model variation happening again, right? There it is again. Or, this could technically be considered a potential breaker, right? Run on stops to the low, ran above the high, last down candle, you extend that over. That can also be considered as a breaker, right? That overlaps with an inversion fair value gap at like the low of it. So things converge also. Another thing to consider is models work inside of each other in many cases, right? Like the market maker model has breakers all over it and YouTube models all over it in every phase, right? It just matters what works for you. The multitude of models generally, in many cases, leads you to the same thing. Sometimes very similar entries, right? It's just depending on the kind of person you are and what makes sense to you. What stands out to you, right? What I just said here should put a whole lot more weight behind the fact that you really only need one model and make you realize why that's the case, besides someone just telling you that that's the case. Because it leads you to a lot of similar things. Things overlap. And then eventually, when you do become well-versed in identifying multiple models, if you're able to have one that you're really good at, and you're able to start seeing other models form in conjunction with the model you've chosen to engage in and master, that adds confluence and more trust, because now you see multiple things converging with each other in terms of the model frameworks and entry patterns alongside your bias, right? If you're good at bias, like, we basically called proper bias today. Once you get all these things in alignment, you start to see that things are not as complicated as we make them early on, right? They're much more attainable than we think, given the mindset as like a newer trader that hasn't spent a couple years, observing these things, making mistakes, or not even having the chance to sit and, listen to someone, talk like this, or someone like CJ, or someone like ICT himself, so and like some of the things that I've discussed today, like the overlapping models and watching the continuation variations of each model, those of course are things from experience. Those aren't things that you just know right away, right? They're not things that just automatically pop up because you watch an ICT YouTube video, right? Those are little nuances that come later down the line. Like I was talking about earlier with the wicks, right? The up wicks, if there was like a large up wick and price retraced in a down move, that acts as a premium array in many cases, right? ICT did talk about that, but it probably went over a lot of people's heads that are new, right? They probably didn't even understand what the hell he said because they're focused on what they want to learn, but that's why you got to go over things multiple times, because you'll relearn things as your knowledge grows. So does your awareness to what's important. So the first time you watch a video, or the first time like you watch this live stream or any of my videos or anybody else's, you're only going to go in with the knowledge that you had before you went into that video. So your reticular activating system is going to be focused on what you want to learn, right? What you're looking for. You're maybe hearing for the buzzword order blocks or fair value gaps. But then some of the important factors that are taught in whatever lecture you're listening to, it'll go over your head because your focus is on something you want to focus on, not what's actually important, or being on the prowl for other things that could be important because your level of understanding. You see what I mean? So that's one of the things when we're learning these concepts we have to be fully aware of, because we have our preconceived notions going into whatever lecture, live stream, or whatever the case may be, and that specific initial thing that we're trying to focus on could fog our view for what's being taught, unfortunately, right? But it happens to the best of us. But once we're aware of this, we can start moving forward in a more effective manner when it comes to learning. So I hope that's helpful. And then I hope I answered your question fully in terms of the ICT concepts and like the analysis paralysis portion of things, and the fact that there's so many things to try to focus on. I hope I answered that. And then one more thing on that before we just start anticipating the open delivery here. It's going to take a little bit of time, right? It's going to take some experience, and trust and believe that you don't need every single asset understood, or every single PD array at any given moment, or every single model at any given moment. It's what's important right now that's important. All right. So yeah, I hope I answered the question about that stuff. And we're gonna do this a lot more, and I'm gonna break down a lot of my processes live with you guys as we move forward throughout the rest of the year. So I hope that some of the things, like for example the analysis paralysis factor and all the information, I hope that I'm gonna be able to narrow down some of the important things, so then you guys can formulate your own processes. Right, and just understand how to go about that, and it's all customizable to what's important to you, the asset class you trade, how you trade, so on and so forth. So, yeah, appreciate you, Maddie. It's been a long road, bro. It's definitely been a long road. As it is for everyone, in pretty much anything we do, right? So yeah, let's see what happens. So just observations of what we've seen so far. Price in London rallied up above the open price for the daily range, which is midnight or 9 p.m. Pacific Standard Time. So this here, technically, what we currently see, if we're going to believe that London sets the high or low of the day during the daily range, if we're to believe that, given what we've already observed in the DXY as well, then we should be observing a potential bearish power 3 so far. And then again, the target would be the previous day's lows, which are all available for each of the indices, along with S&T, which also further amplifies our ability to trust that this could potentially be the high of the day here. All right, so, and again, if you guys haven't had the chance to dig into my Power 3 video, definitely do that and just go check it out, because that's very helpful. And if you guys got value so far, please hit the like button. I really appreciate that too. It means a lot to me just in general that you guys are here, so I appreciate y'all showing support. Yeah, so again, as far as validation, invalidation, which is another one of those aspects of things that in many cases requires more experience, just to observe and being comfortable with other specific factors in your process. But an easy observation has to do with the 3 PDA rule that ICT has taught the last couple years. You look at, like, for example, this time frame. We have like a 10-minute order block, 10-minute fair value gap, and then we have another fair value gap up here, and then another up candle. So if we just see price literally destroy these with no effort, that would be an issue, especially if DXY chooses to fall, and then of course start breaking through the discount arrays here, and then this breaking through the premium arrays. Again, it is NFP week. Okay, it is Monday, and inside Monday, or Sunday and Monday, rather, for the weekly Power 3, generally Sunday, Monday creates consolidation and manipulation. So going into these days, we want to always keep that in our view. Okay, so because if a loss was to be taken, say it was to turn around, right? But then eventually throughout the week ends up dropping still, then us understanding that perspective gives us the why behind us potentially being incorrect, right? But correct for the bias if it was to continue going lower, assuming it's not going to totally turn completely around and go higher, right? I feel like the why is a very important factor, and there's specific things to help you understand the why, and understanding the daily, weekly ranges, understanding how Power 3 operates, understanding validation, invalidation are just some things that assist you in that knowledge. Right, so yeah. So we also have this down wick here. We can consider observing this midpoint of this wick, this down wick, because that can also potentially act as something significant, especially since it's also aligned pretty much with this the low of this fair value gap here. So if we look at the DXY, just observe some of the price delivery. Something that I don't like seeing for the most part when price does this type of stuff, right? It gives you the sense of a trend line. So I mean, they could, we run the risk, of course, when this type of thing is present, of price trying to dig down, stop them out before it chooses to go. And again, this is a daily order block, so all the way down to the midpoint of this range from this high to that low, that whole area is the daily order block, right? So to the midpoint of that range, that the whole areas from the midpoint of that range all the way up to the high of this order block on the daily, we just visually pull that up. So like the midpoint here to the high, we want to see that respected, and the less it needs to reach down there, the better, right? Because the more that it spends time inside of a PD array, the less likely it is that that specific PD array will have significance, especially if you're layering intermarket relationships. But so far, everything from what we see seems to be going according to plan. So yeah, I mean, we got this inversion fair value gap here too. Maybe keep tabs on that as well. I mean, if we go to the 4-hour, we got an order block here as well. So we can observe how the responses from there too. And can y'all let me know what the quality's like? I can't really tell what the quality's like in terms of the visual. If you guys could like let me know, is it clear to see? Is it like foggy-ish? Because if there is any issues with that, I'm gonna just have to get another monitor this week. So yeah, just let me know. Yeah, so and then similar to what we talked about with the S&P, or was it? Oh, it was the NASDAQ. Similar to what we talked about with the NASDAQ, in terms of Power 3, we see that we got Sunday's open price here. We have the midnight open price here. We spent a lot of time below it, and then prices rallied up. We basically attempted to attack previous week's high, right? So, let's see. Quality is good. So in terms of the time frames, I actually have. Oh, I don't have it on. My bad. I have this little indicator here that kind of helps show it down below. Yeah, like right up in here. I'm not sure if if it's bright or not. I'll probably have to adjust that a little bit later. So is this visually acceptable? Like, can y'all see the time frames down below the screen? Sorry, y'all. This this live stream is also a live stream that has to iron out some of the technical situations just for the stream, so that we don't have to worry about it later. Yeah, if some aren't using that little indicator, they definitely should. That's dope that you use it too. Yeah, I seen so many people using it, and I was like, yo, I might as well add that on, right? Because then doing things like live streams, since the logo or banner is covering the upper left of the screen, it's definitely helpful to have that indicator. Yeah, Maddie, it's definitely had to test it somehow, because they give you the option to test it on the software I use, which is was it Streamlabs or something like that. But I mean, I don't know how much I could trust that. And obviously, there's some things that were showing perfectly in the test, so-called test, that that are still an issue right now, like the chat on the screen versus having to only use the chat on YouTube. But I mean, that's kind of like a small situation. Yeah, that little indicator is definitely helpful with the screenshots. Definitely. See, so right now we can see how DXY is rallying alongside the indices. Remember how I said we could reach up? It could reach up and try to stop things out. I preferred that it wouldn't break through this fair value gap. I preferred that it doesn't do that, right? So we would have to just wait and see and observe what else are these other time frames doing. Let's see. So if you look at it from the 15-minute time frame or the 30-minute time frame, this swing high here to this swing low, if you measure that out, if DXY continues to go higher, this is just reaching for the premium array. But again, if this fair value gap gets sliced through and doesn't hold as any type of resistance, that would invalidate this whole scenario, at least for the time being. So we've hit the open price, or the open time, I mean, for New York. So we will see what occurs. Remember, I said any trading before the open price, this open price, could lead you to get stopped out, or have the chance of getting totally whipsawed. And you can see if we were just too driven to enter the trade and hold and be greedy to try to get that low, the whole situation would have been stopped out, right? So let's keep our eyes on the DXY and the indices at this point. So let's see what this opening range has to offer. So generally the opening range, the first 30 minutes from the open, which is classified as the opening range, ICT has said that that portion of time is for the gamblers. Why does he say that, you may ask? Well, this type of thing occurs, right? So if you hold on too much to a specific idea before the open price, you could end up getting chopped around, whipsawed, or just like in terms of what we're seeing here, price can totally turn around on you. So we're going to see if this is going to be significant and stop the potential for downside ideas, at least for the time being, or if this is just a wick up like we assumed that it could do, because we still have the S&T. Still have the S&T present. DXY still looks like it could just reach lower to go continue going higher. And again, it could reach down to here. That doesn't stop anything. But once we break through these consecutive down candles, this fair value gap and this swing low, that could be significant in terms of price not wanting to continue going higher. But we are inside this 4-hour order block. We want to see how that respects as well. And then we've also came from this daily order block, which has pushed price higher, right? And then of course, if we look at the higher time frame, I'm assuming that we're going to continue with this bullish tendency, right? But again, just because I'm bullish overall doesn't mean that every single day is going to be bullish, right? There's still going to be some times when price is bearish to reach down, grab sell side liquidity to pair their smart money buys with to then go higher, right? So you got to keep that factor in mind as well. Every time you look at a potential bias, not only is time important, but how price is using time and how price uses specific PD arrays inside that higher time frame storyline, right? Because if you're on the 1 minute and price declines here, you'll think that price is falling off the planet, just for price to possibly turn around at a higher time frame PD array, like one of these, to then go higher, right? So that's the danger of being a 1 minute time frame warrior. All right, so we have hit the daily volume imbalance I pointed out that we reached for my private community last week. If we look at the daily chart here, you can see the volume imbalance. Yeah, I mean, you could be a 1 minute warrior, right? But you have to have the overlay of higher time frame understanding, right? There's nothing wrong with 1 minute warriors, unless that's all they sit on is 1 minute, because then aiming for 5 points or 1 point is pretty much all you'll be able to get consistently, right? At least from my perspective, because you'll get chopped around so often, it's ridiculous, because you won't understand what they're actually trying to do. So this huge explosion has occurred during this opening range. So again, from that time frame, if I look at that compared to the higher time frames, we can see that there is a lack of symmetry here. And then of course, not only that, from this high to that low, we're kind of still in a consolidation. We've also engaged a consolidation here as well. What I do see is it holding inside this volume imbalance. I did initially say that if this was to be trusted, we want to preferably stay below this volume imbalance, which it's not doing at this current time. So for the NASDAQ, at least, it's not ready to do anything bearish. And so if price does reach higher, I would assume that these are the liquidity pools it's going to reach for. And this is a previous day's high. Actually, it's a previous week's high. Okay, so because these gray areas too, if you guys aren't familiar, these gray areas outline Sunday. So I have it basically breaking down each week, so we can visually see it from any time frame, what the weekly range looks like, where the weekly highs, weekly lows, daily highs, daily lows, so on and so forth. It's just one of those helpful indicators type things, like little situations. I do notice that between these candles here, we do see an SMT now. So that kind of puts the odds of us potentially not being ready to fall. That puts that into play. All right, so we definitely want to keep that in mind. But yeah, you could see just the lack of symmetry. So yeah, when there's a lack of symmetry in the market, like we see here, I mean, one's going higher, one's going lower, one's kind of coming off the low. You know, you don't want to push too hard and push your edge, because you know things are just not in symmetry. You know, they're not symmetric. And that's one of the first layers of high probability analysis in terms of, you know, what price is going to do. Again, just because this is rallying, right, price could easily, very, very easily reach just up to this buy side liquidity, keep this SMT intact from that daily chart, and then reverse. Right? It could very easily do that. Right? So you want to keep that in your thoughts as price delivers here. Generally, I don't trade Mondays. Generally, I'm, you know, always just looking at the chart, and you know that's part of the rules that ICT also shares. You use Sunday, Monday to analyze, and I mean you could kind of see why, right? You can kind of see, and if you think in terms of Power 3, if you don't understand the way Power 3 operates inside the weekly range, you can have a bearish bias, but then get your ass handed to you because price manipulates opposed to that direction, stops you out, then Tuesday, Wednesday, Thursday goes in your intended direction, right? So that's one of the reasons why ICT says to use Sunday, Monday as like an analysis type of duo, because Sunday, Monday is consolidation manipulation inside the weekly range, right? So as the week progresses, that's why you hear a lot of other ICT traders also say that they like to wait, right? Or they don't take Monday or Sunday too serious, right? Because they want to see what price is going to do. If they're bearish, they want to see what price is going to do, right? What it's going to offer for the week, because that weekly expansion, that weekly framework, that is what is going to drive your trade setup in a fast-paced manner. So yeah, so it looks like NASDAQ is one of the stronger ones. We also see DXY is also out of alignment, at least with the NASDAQ. And if we go to the S&P and the Dow, right? If we look at let's just look at the S&P for now. I do like to see what we're seeing here in terms of this previous day's low. Right, so we got very, very clean liquidity pool here on the S&P. So if the DXY continues its rage higher, again, do you notice that I'm not saying, yeah, it's time to buy, guys, let's buy, let's switch my bias? There is a possibility of that happening. But what am I favoring, given the analysis we did early on? I'm favoring something going in the intended direction in terms of the sell side, because of what we've seen intermarket relationship wise, and bias doesn't overall change too much, right? It doesn't change insanely every single day, right? You'll have a higher time frame bias. Those lower time frames will offer different sides of the market inside that higher time frame narrative and bias. But initially, it'll end up going to its intended direction on that higher time frame perspective, right? So any type of retracements in, say, like a bearish market, any type of bullish retracements should be looked at as short-term in nature, right? Until, of course, the higher time frame proves that price is going to go in the other direction, which generally happens from a break in market structure, sometimes quarterly shifts, right? If things changed with SMT, like if it's been like one-sided, like we've seen, it's been one-sided bullish. If there's like an SMT going into a new quarter, then there's a break in market structure, which, like we discussed earlier, hasn't fully happened yet. Then that would change the overall dynamic, right? I'm assuming, given what we've observed, that price will eventually want to go in our intended direction. It did seem like it was getting ready to go ahead and do that, and then attack our sell side liquidity here. There was opportunities that formed, but the questions you have to ask yourself are: was that your model? Was it in line with your rules? And if not, it wasn't your setup. So none of these opportunities was my setup. And if your rules are the same as the ones that are showcased on the YouTube channel for with ICT's YouTube model, or whatever the case may be, you didn't miss anything either, right? So if you sit there thinking, damn, I wish I would have taken part in these moves. Well, if your model wasn't there, you need to not think that way, because it's toxic thinking. It's irrelevant, right? Somebody made money, yes, but if it's not if the things you're looking for don't happen, that wasn't your setup. So you have to look at it that way, because it's otherwise it's like you owning a donut shop getting mad that the real estate agent made money. That's not your business, right? Like that's literally not what you're doing, right? That's not your process. So why are you mad or upset or even contemplating on the fact that this other person made money doing something totally different than you? See what I mean? Right? So like that's like that's another experience-based thought process. And it's all under the guise of mitigating the negative thought processes that most of us face as traders. Right? When I get chopped up, it's from 1 minute tunnel. Yeah. That's another thing that I used to have issues with too, and something that probably went over a lot of people's head as well in some of the lectures ICT has done. He says, I spent more time on the higher time frame than I spend on the lower time frame. When he said that, when I first heard it in his mentorship, I did not understand what the hell he was talking about. I'm like, how, bro? How does that even make any sense? And then now come to find out, 4 years later, it makes total sense, because you get narrative, you get important structure and important bias situations specifically from the higher time frame levels. You know what I mean? And you get to trust your lower time frame entries if you're in line with the higher time frame perspective, right? So you should be spending, like I said multiple times in this this live, you want to try to get really familiar with Power 3 as well, because that's also something very helpful when it comes to bias and just how price operates and seeks liquidity. Right? It goes down to go up, it goes up to go down. So yeah, or you could even say it like this: it goes up to a premium above an open price, and then it goes down to a discount, or it goes down to a discount below the open price to go higher to a premium or some form of buy side liquidity. All right, if you want to get a little more technical with that that subject. So as we can see, remember how I said earlier how price could want to reach up above this potential high, maybe seek that, then go? I did say that for the NASDAQ, but it looks like the NASDAQ has, got a supercharged, rally for whatever reason. showing that this here, if we are going to end up being bearish still with bullish DXY, this here shows us that if we're trying to sell, we don't want to trade the NASDAQ between the three indices, because this is indicating strength. It's indicating higher manipulation, right? So because that's the case, do I really want to sell something that seems like it's stronger than something else when I can just observe this one, right? And see and see if this one wants to reach down with the same, basically the same narrative, right? See, so because price took out that high, there is a swing low here. If there was going to be a sell, there'd have to be a fair value gap somewhere in here, right? I'd like to see it, you know, do basically what it's done, basically run up from the low, run out some form of buy side liquidity, then form some type of swing low, shift in market structure, and return to a fair value gap. And if an entry was going to be taken, given the context we discussed, that would be ideally what I would like to do, right? Catch the variation, knowing that price has moved, knowing that price continues to go higher, if that does remain to be the case. 650, remember how I said the macros, 950, remember how I said the macros you want to wait for in terms of entry, right? If we deliver here, everything that I've discussed here, from bias to timing to, you know, everything, variations of the models, all of that is visually being represented to you. Like if this delivers lower, everything that I've said basically gets validated, right? So